In the news this week, what's happening with inflation? Sentiment and optimism, where does the country stand? And will there be any more rate cuts? Let's take a look. Before we begin, remember to like this video and subscribe for more economic updates. One rate cut down, who knows how many more to go? Federal Reserve officials' most recent summary of economic projections indicate we may see the equivalent of 8 more interest rate cuts in quantities of 25 basis points each between now and the end of 2026. But how things actually play out from here will depend almost entirely on the way in which the economy and the data evolve over the next 2 years. Fed Chair Jay Powell said that very thing just a handful of days ago, emphasizing, quote, "We will be guided by the incoming data." The biggest data highlight of the week is sure to be September CPI, which will be revealed on Thursday by the Labor Department. Economists project that headline CPI rose 2.3% on an annual basis last month, which would be 0.2 of a percentage point slower than the pace in August. Core CPI, which excludes more volatile food and energy prices, is expected to have climbed 3.2% in September, which would match the August rate. Currently, both headline and core CPI are running at their slowest rates in the last 3.5 years. September PPI, the Producer Price Index, will be released the following day, Friday. PPI, which gauges price changes at the wholesale level, is expected to have increased 1.6% year over year, which would be 0.1 of a point slower than the August rate. However, economists are anticipating they'll see some evidence of stickiness in core PPI this time around. Annual core PPI in August landed at 2.4%, which was the same as July, but the rate in September is projected to come in at 2.7%, 0.3 of a point faster. Some other news we'll be watching this week is the release on Wednesday of the minutes from the Federal Open Market Committee's September policy meeting. The half-point rate cut enacted at the meeting, the first rate reduction in more than 4 years, lowered the benchmark federal funds target rate down to 4.75% to 5%. As for other data we'll be watching this week, that includes the Small Business Optimism Index for September, which will be released on Tuesday by the National Federation of Independent Businesses. Economists expect to see that the index came in at a reading of 91.9 last month, which would be about 0.7 of a point higher than where we landed in August. Despite the anticipated uptick, the metric is on course to come in below the index's historical average of 98 for the 33rd consecutive month. Then on Friday, we'll get an updated look at how Americans feel about the economy, as well as their own economic prospects when the University of Michigan issues the preliminary reading of its widely followed Consumer Sentiment Index for October. The consensus estimate says the index will come in at 71, nearly a point higher than in September. That would still leave the metric well below its long-term average of 85, and with little expectation it's going to significantly improve anytime soon. That's all for now. Make sure to join us on Saturday when we'll go over what actually happened. This is Devlin Steele for Augusta Precious Metals, signing out.